45 years, 0 name changes, new offices, more staff, improved technology to better serve you. Education, services, investments. Think real estate, think Marshall Reddick. Brokerage, property management, private lending, creating financial independence through real estate since 1979.
All right, so I want to welcome everyone today to Asset Protection and Insurance for Rental Properties with Steve and I, and feel free that if you have questions, please type your questions in the question section or if you want to chat, you can send a chat also, and I will make it a point to look at those. Marshall Reddick is a full service company. We've been around since 1979. We're a full real estate brokerage. We have a property manager, we have private money lender, and we have an investment fund. So what's great about Marshall Reddick is we make it possible for you to purchase real estate in the carefully selected areas, and we provide all the brokers, contractors, property managers access to all the top resources, CPAs, insurance agents like Steve, attorneys, and everything that you would need. First off, I want to introduce you to myself. I've been with Marshall Reddick, it seems like forever, since 1996, first as an investor and then as an agent, a mentor, educator, and I've led women investment programs for over 1,000 women. I moved to California, to Los Angeles in 1995 after attending Florida State University. I've been a realtor for 25 years as well as an avid real estate investor, and I've purchased 24 rental properties through Marshall Reddick. I also am part of the Marshall Reddick Mortgage Fund as an investor, and I can also help you invest in the mortgage fund. I am passionate about helping animals as an advocate and volunteer, and I have 2 college-age kids, Harrison, who's about to go to law school, and my daughter, Olivia, who's in undergrad and is going to be a doctor. So, Marshall Reddick, we have a national footprint, and we have carefully selected areas that we go into, especially landlord-friendly states, so that the law is on the landlord side. We are in Los Angeles and Newport Beach, which are our main offices, Newport Beach being our headquarters. Then we have 5 offices now in Texas, in Dallas, Austin, Houston, San Antonio, and New Braunfels. We also have 2 offices in Clarksville, Tennessee, and in Nashville, Tennessee. And then we have an office in Cape Coral. So how do we choose where to invest? Well, one of the most important things is the job market. How many jobs are there available? What type of jobs? What type of industry? We also take a strong look at the vacancy rate. We look at economic diversity of an area. We look at housing affordability. Is the state landlord friendly? Is there strong education? Is there universities in the area? What is the ratings of the school district? And also, is there reliable property management, which Marshall Reddick provides? So here's just some pictures of some of our offices, and you can see all of our different offices. This isn't everyone, but this is a lot of our office staff and people in all the different offices. We have I think about 150 employees right now, so there's a big group of us, and we manage around 3,000 homes. All right, next I'm going to turn it over to Steve so we can get right going with insurance, and I know it's a hot topic right now these days.
Hey everybody, thank you, Christy, and thank you guys for being here, sharing some of your time with us this evening. Like Christy said, I love questions. I like to be more engaged, so if you guys have questions, don't be shy with the chat box. Type in any questions, happy to help, and we'll answer those. Yeah, we have the slides here, but most importantly, what I want to do is make sure I'm addressing your concerns. So again, put them in the chat box so I make sure I don't miss it, and I'm happy to address those for you. So, and not that you're here for me, but sometimes it's nice to know a little bit about who's talking at you. So just one slide about myself. I am a fellow real estate investor as well. Originally from Newport Beach, where the main Marshall Reddick office is. I've been in the Houston area for the last almost 4 years now, which is one of the newest Marshall Reddick markets. Their office is just down the road from me a little bit. And I've been a Marshall Reddick client investor for about 12 years now. I've bought and sold in 5 different of their markets. I'm also a capital partner in the Marshall Reddick Fund. private lending investor with Marshall Reddick, and I'm a licensed insurance agent. We'll see if the slides cooperate. There we go. So our agency is Fidei Insurance Services, which is an independent brokerage started in 2006. We have access to over 100 different carriers, and we operate in all Marshall Reddick markets and many more. One of the great things about us, we're very proactive, always looking for better deals for you, making sure you have the right coverage in place and that everything is correct and the best price we can possibly find. We have an excellent claims department. We advocate for our clients. That's important to us. And we have an entire service team dedicated to billing, renewals, policy changes, anything you need, one-stop shop. We're on it. And our specific branch, the one that I run, is called the Investor's Choice Program. And the whole reason we exist is to create hassle-free insurance for real estate investors. That's everything we're trying to do. And what does that mean? That means we want to get your assets properly protected. We want to maximize your cash flow. We want to use A-rated carriers you can trust. You know they're solvent. They can meet obligation if need be. We have a low price guarantee, so for every client, for anything that comes in, we always shop every carrier we have. Hands down, we shop every single one because that's how you find the right deal. As soon as you think you know everything or get lazy like some agents do, you go, I'm just going to shop these one or two. I know what I'm doing. Then you miss the whole world. So I'm very, very proactive, making sure no matter what, even if we think we know, we still shop every carrier because a lot of times you find a pearl. We have an all-star service team, and we also do insurance advisory. Bottom line is, as a fellow investor, I understand what you want and what you need. So that's what I'm trying to do for you here. We work exclusively with real estate investors. We're strictly by referral only. Main reason we do that is because rather than spending time and money advertising, chasing things down, we just want to be able to take better care of our clients that we already have and help them grow and get more properties and grow with them. We custom tailor everything to your specific goals and needs. And the main goal being to find the perfect balance between asset protection and cash flow. We're always finding that balance there. And as much as possible, sometimes it takes a little longer with underwriting these days. It's a little more delayed at times, but as much as possible, we try to get you the quote on the very same day, usually within an hour. And at the same time, we want to make it as fast, fun, and enjoyable as we can. And a couple things, if you worked with us recently, you might see your name in here. Just a couple reviews, a lot of 5-star reviews lately. Thank you. It's probably some of you guys listening. Next, what is insurance? Sometimes people don't always have a good idea of exactly what it is, but at the end of the day, it's just a private contract between you and the insurance company. The insurance company is promising to restore you to the financial condition you were in prior to a loss. What's a loss? Something like fires, lightning, water damage, whatever causes damage to your asset. And then as long as you paid your premiums, then the insurance company is promising to restore that, to fix the damage, to bring you back to the financial condition you're in prior to the damage. And your insurance policy will spell out all the specific things they cover. But certain things, just so you know, because I get this question a lot, earthquake and flood are always separate policies. They're not included in a regular home or landlord policy. And the current insurance climate, as most of you know, I know there's been a lot of concern lately about the fires in general, the recent California fires. We have hurricanes, we have tornadoes, the future of insurance, cost of insurance, how to reduce that. We're going to get into all that. Again, if you have any specific questions, put them in the chat box. I want to make sure I address those. But that's the main focus of this evening. So let's dive right in. So the current insurance climate, as you probably know, we're in what's called a hard market. It's a tough insurance market. A lot of the usual carriers aren't as available in some areas. Rates are a little higher. Sometimes we have to go to surplus lines. There's a lot of different things going on. A lot of that is because of severe weather events that have been happening. There's a political landscape, there's inflation, there's the economy. A lot of factors making it harder to find insurance and at a right price point for you too, to make all your numbers work. So our goal is to help you navigate that. And that's a wonderful thing about being with the broker is we understand the landscape. We know how to look for the best place you need. We know how to navigate that. We know how to, again, find that balance between asset protection and cash flow, and also get you the right coverage for your situation, your need, It's certainly not a one size fits all. Everyone has their own needs, their own goals, what they're trying to do and what they can do. And we're here to help you with that. So we want to structure your policy to have the lowest possible premium and also getting you what you're looking for. Right now, the big concerns we're hearing about, in addition to what I've mentioned, a lot of these are on the slide, is what if the tenant damages your property? You know, they trash your house. We've had some tornadoes in Texas, tornadoes in Tennessee. We've had the fires in California, the devastating ones recently. We've had hurricanes in the South. Insurance costs are going up. Some people are worried they might become unaffordable. And of course, we want to know, how do we lower insurance costs, which is doable, by the way. But what do we do about that? Well, my answer to that is get educated and then also adapt to the current market cycle. I think it's good to understand, this helps me too, is, you know, just like everything else, home values go up and down. Lending rates, they go up and down. Rents, they go up and down. Insurance does the same thing. And right now it's in a higher part of the cycle, but there's still plenty of things we can do. So part of that means knowing the coverages you need and also the ones you maybe don't need or don't need as much of. We can play around with deductibles. We can eliminate coverages you're not as concerned about. The goal is, let's figure out where we can cut things as much as possible, because we want to make your investments more profitable. And that's doable, even in the current market. Seeing a lot of that right now. Another thing I always try to keep in mind is the billionaire mindset. I love this quote by Warren Buffett. It's one of my favorites. It's rule number 1, never lose money. Rule number 2, never forget rule number 1. And to me, that's the whole purpose of insurance, is it makes sure you don't lose money. Because if you have, let's say you had a $500,000 property and it burned to the ground, how long is it going to take to earn that $500,000 to buy another property again? That can set you back and set back your wealth building journey quite a bit for most people. So the whole purpose of insurance, in my mind, is so that you don't lose money. If something happens, they restore it, and then you can keep moving forward on your track of wealth building. You don't have to go backwards and try to pick up lost ground. Some of the really common problems we're seeing right now is a lot of people have the wrong kind of policy. So the way this has been happening the most commonly recently is maybe you own a home and you bought a new home, you're going to move out and you're going to convert your old home into a rental property. A lot of people still have a homeowner's policy, and what they need is a landlord policy. And that's something that could potentially cause denial of claim if there was one. So making sure we have the right kind of policy. Do we need a homeowner's? Do we need a landlord? Do we need a vacant property policy? That sort of thing. That can be really important. Another thing is some people don't have liability coverage, or they don't have enough liability coverage. That's if someone gets hurt on the property. And then personal injury, where that would usually come in the case of a landlord situation, is if it's like a wrongful eviction. If you have a tenant that claims wrongful eviction, that's where you really want to have that personal injury coverage. Another thing we're seeing, and the LA fires have highlighted this, unfortunately, is we're seeing people underinsured. We're seeing the wrong occupancy listed on policies, which again can also be denial for claim with some carriers. So what does that mean? Like, is it your primary home versus, is it a landlord policy? Is it a landlord rental property where there's a tenant? Is it a short-term vacation rental? Is it vacant? Is it under construction? Maybe you're in the middle of a flip. All these things are different occupancies, and it's really important with insurance that we make that that we make sure that's correct. Some people don't have extended replacement coverage, and sometimes there's exclusions people may or may not be aware of. One of the more common ones we're seeing lately, and carriers have been doing this to try and accommodate and get the rates down a little bit, but is having reduced water coverage. So maybe if there's water damage, they're only going to pay up to, say, $50,000, up to $100,000, as opposed to the entire dwelling amount on the policy. Some carriers now don't even offer water coverage. So that's something to look out for, because my understanding is about 70% of claims comes from water damage. So we really want to make sure we have adequate water coverage. Other things we're seeing right now is the property manager or the lender might be listed incorrectly or maybe not at all. We want to make sure that's addressed. Some people, in order to accommodate the prices, have deductibles that are just absolutely insane. I saw one yesterday. The person had what was it? I think it was $120,000 deductible on a regular single family home. And I asked them, I said, well, that's fine if you can afford that. Could you afford that? Would you be okay with that if anything were to happen? They said, absolutely not. That'd be the end for me. It'd be financial ruin. Okay, so we need to find a better solution. Keep the rate down, but also make sure the deductible is within reason. Another one is they don't have coverage for rental income. Maybe they don't have enough, maybe they don't have any at all. Or their trust, their LLC, or their umbrella policies aren't integrated correctly. That's really important too. We want to make sure all this is integrated right. There's also incorrect structuring if multiple structures are on one property. Let me unpack that a little bit. Let's say you have one property, one piece of land with 2 homes on it. Maybe it's a front house and then a separate detached back house. If they're both rentals, each of those properties, each of those little structures needs its own policy. And if they don't, it might be uninsured. And we want to make sure we have that right.
What about if you have like a detached garage? Does that have to have a separate, like a coverage on that, or how does that work if you have a detached garage?
So a detached garage would be covered under the other structures category, which is called coverage B. But if there's someone living in it, like if it was a converted garage and now it's used as for housing, then you would want a separate policy for that. If the structures are detached, then we want separate policies. If the structures are attached, then we can use one policy. We might have to make it a duplex policy instead of a single family, or a triplex if that's appropriate. However many units there are. If they share a wall, we can have it on one policy. But if there's anything detached, they need their own. So that's that one. Not taking advantage of leveraging certain coverages to lower the cost of policies. We'll get into that a little more in a bit. And then we also want to make sure we integrate the HOA if there is one properly. And some carriers have a discount for that too.
What I noticed too with my own policies, for those of you that don't know, I said I had bought 24 properties in Marshall Reddick, but I still have 11. And I have to constantly every year look at my policies because it seems like things go missing on my policy. They remove things, they make errors, they don't update things. And I just noticed I opened a policy tonight and it still has my roof as 2011, but I put a new roof on last year. So I thought, ooh, I forgot to tell them that I put a new roof, and then another property of mine, a week ago, they just canceled me because I didn't have a roof. And I'm like, ooh, I put a new roof on 6 months ago and I forgot to tell them. So it's very important to keep up to date if you get new things, even if you get like an alarm system put in or a fire system or anything you get put on your property that will help you with discounts. I mean, there's a lot of things you can get discounts on.
Absolutely. Those wonderful points. Update everything as much as possible for accuracy purposes, but also to take advantage of every discount you possibly can. And that's a really good point. And thank you.
Yeah. And I was telling Steve too, like, some of you have multiple properties and have them with the same lender. I had a lender a couple weeks ago and I'm still trying to unravel it. And they paid, I have 2 houses, 2 different, one in Florida, one here, but it's the same servicer, Shell Point, and they put both of the payments on one property instead of individually paying on each out of its own escrow account. So you really have to be on top of your lender to make sure that they're escrowing it out to the right insurance company and the taxes as well. And same with checking your insurance policies every year to make sure that everything's correct and updated.
That is a big one. So let me jump on that for a second, because what we're seeing right now, sometimes there's carriers that have pulled out of certain states, so you can't get a new policy with them. But if you already have one with them, then you're grandfathered in. And a lot of times those ones have better rates than you can get if you were to shop for a brand new policy right now. So it's really important to make sure the lender is, if it's being billed to the lender, you really want to make sure the lender is paying the right policy and paying on time, because if they miss and the policy lapses for non-payment, you probably won't be able to get it reinstated. And then by having to reshop it fresh, there's a good chance it's going to cost more. So that's a big one in terms of keeping costs down as much as you can, is just make sure what you have doesn't lapse. And staying on top of the lender is a big way to do that. Mm-hmm. And then taking advantage of all those discounts with a new roof, with alarm systems, burglar alarms, fire alarms, if you have HOAs, if you have any changes on things, talk to your agent, make sure they know, because it might be material and you want to make sure you're covered properly and getting the best deal too.
What
And
about,
these are, yeah.
I was gonna say, what about the fires in California? Because I live right in Los Angeles, the middle of the fire zone. And for example, I am going to buy one of those pumps that I can use for my pool, that if there's a fire in my neighborhood, I can water my house down with the water from my pool. Do you get any
Yes.
sort of discount for anything by having a pump for your pool for water hosing?
I haven't seen that one yet. Some carriers are starting to do water sensor discounts. So if you have a water sensor that can detect a leak, that kind of thing, they'll give a
Oh,
discount
I
for
have one of
that.
those too. I didn't even know you could do that.
Yeah, not every
I
carrier
have a
does it,
flu.
but check and see. Yeah, because that can get you a nice little discount. There's all those little things that, you know, some
See,
people don't
I
know
wouldn't
about.
even think about that.
Yeah.
And I do. I've had a flume on my house for 2 years. It's a little device that you put out where the water comes into the house, and it basically tells you on your app anytime. And I get leaks all the time. Like I'll leave a hose on slightly, or a toilet will be running, and so it tells you. So I didn't even know. I don't even think. Like, I wish there was like a list, a laundry list or something that say these are all
No,
the things that you should
we
seek
should
to
create
have.
one.
Huh?
Let's connect
Yeah,
after this. We'll create one and then we can give it to all the attendees. I think that's a great idea.
Another thing I just got in my house is something called a ting. Have you ever heard of that?
Uh-huh.
I have a ting in my house too, to check the energy surges in my house, so that it makes sure that no fires start in the walls or anything. But I got that straight from State Farm, but they said they don't give a discount yet on that.
Yeah, I haven't seen a discount for those, but they are very cool. I think they're fantastic.
Yeah. And then I have a heat sensor in my house. I have I try to do everything. And I have tankless water heaters. Do they give discount if you have a tankless water heater inside your house instead of a regular water heater?
I haven't seen that one yet either,
Okay.
but I imagine it's coming because they're so much better.
Yeah. Okay.
Yeah. And the reason all this stuff is important to get all this correct, everything we're talking about and have been talking about here, is because if it's incorrect, we don't want to get denial of claims or think you have coverage when you don't. All this stuff just causes more time, energy, loss of money. It's just paying more than you need to. I can't even tell you how many people are paying more for insurance than they need to. I had a person come in yesterday. They're paying $65,000 a year for their primary home. And I'm going to get that down to probably about 8,000.
65,000 to 8,000?
Uh-huh.
Wow, that's huge.
It's massive, and they just didn't know what they didn't know. And so they have for whatever reason, they have way too much coverage. They have all these coverages they don't need. You know, they're covered. Their other structures coverage is covered as if they have, 5 guest houses on the property and a barn, and they don't have anything. So we want to minimize that as much as possible. They're overinsured on their home, and this was actually the one. This one had a $60,000 deductible as well. So they're paying $65,000 a year. It's a regular primary house, and they have a $60,000 deductible.
Must be in Florida.
It's actually in California. It's in NorCal.
Oh,
yeah.
shocking.
We're gonna get that down. We're gonna help them out because that's what we're here for.
That's good. And I just had Steve look over my policies too to see if we could do better on some of them. But my problem is I've had claims in the last 3 years. I had a tornado on one house. I had hailstorm on another house, because when you have a lot of properties, you get claims, So I have to wait 3 years for them to fall off before Steve can get me like better rates, which is a bummer. It's really not fair when you have rental houses.
At least with that carrier that we were looking at, right? There's other carriers, as other carriers open up and change their appetite and their guidelines, and we can approach them and we'll find something. I don't think it'll take that long, but at least
we'll check. Basically, you want to have, right when you get your renewal for your policy, which is normally like 2 months prior to it ending, you want to start shopping, and you want to go to Steve and have him look at your policy and see what he could do better. And you should do that every year on all of your policies, including your car insurance, by the way.
Absolutely. And
I don't think you do car insurance, but
we do. These days, the more lead time we have, the better, just because sometimes underwriting does take longer, or it might be a more difficult to place thing, or there might be more claims. It just depending on the complexity of the situation. The more lead time we have, the better. So we're not in a last minute crunch. And that gives us the time to make sure everything's right and find you the best options. And so let's dive into the recent California fires, because I know that's certainly something that has been on my mind a lot lately. A lot of people are talking about it. It's an absolute devastation. I don't know about anyone else listening, but I've watched a lot of childhood memories just burn down while that was going on. It was very surreal and definitely hit close to home. So my heart goes out to you if you or anyone you know was affected by those. But there's a lot of lessons that have been coming in. And I think if we can draw anything from this horrible tragedy, it's certainly made insurance real and brought a lot of these conversations to the forefront. And now people are thinking about it and they want to make sure it's right. I'm getting, I don't even know, so many calls every day for people just saying, hey, am I covered? Am I covered correctly? Is it covered right? Is this right? And then it's been great because now we have an opportunity to go have a conversation about things that maybe we wouldn't have before. And or maybe we find out they're underinsured in this area, or maybe it turns out they have a pool house that they didn't tell me about before. Now we can get that taken care of, or we can play with the deductible, get their rate down. It just opens up a lot of good conversations and opportunity to make sure they're insured properly, so that, to Warren Buffett's point, they never lose money. So one of the big ones that's come out is making sure the named insured is correct on your policy. And I'll break these down a little bit in just a moment, but that's an important one. We want to make sure the named insured is correct. We want to make sure you're not underinsured. Make sure you have all the coverages you think you do. Make sure you understand what your policy covers and what it doesn't cover. And also make sure you have
that just came up for me too, that I talked to
Yeah.
Steve about, because I have a trust and my trust is not named after me. And a lot of the insurance companies make you put your insurance policy, or you don't even think about it. You put the insurance, like I'm Christy Dietz, so I put my insurance policy as Christy Dietz. My trust is Riker Trust. So I've had to go through all my insurance policies, call all, and I'm still doing it. Have my trust named additional insured on all my insurance policies, because you can get into problems with coverage because the trust is on title, and you can get into some problems.
Exactly right. There are some reports, I haven't seen it, it's hearsay at this point for me, but I've heard through the grapevine, some people who were victims of the fires, if they had the policy in their name, but the trust was actually on title, they were getting denied on the claim, which is horrific. And I hope that's not true, but all the more reason to make sure everything's right, you know? So that's what named insured means. It means, who is the policy in the name of? Is it in your name? Is it in the name of a trust? Is it in the name of an LLC? What's the name on the policy? And ideally that should match whatever's on title for the policy. So another way to do it is you can own it. You can have the policy in your name, but you just want the trust or the entity as additional named insured, but that way it is on there.
That's what I did with mine.
Exactly right. That's a big one. Same applies with LLCs if that's part of it as well, which is.
And also, you all, when you get, a lot of you have rental properties, your loans are sold all the time, especially right now. The loans are selling like crazy. You need to make sure every time that you change and have your additional insured for whoever your servicer is on your property, like their Shell Point, all of these are constantly changing. So you want to get that correct as well.
Absolutely. Any changes, reach out, make sure we have it right, and we'll get it taken care of. The second one here that we've heard about from the fires is some people are finding out they're underinsured. A lot of that is the result of all the inflation we've been having in the last year or so, where it used to cost, say $250 a square foot to rebuild, and now they're finding in some areas of California it's upwards of $600 per square foot to rebuild. And the policy never got readjusted. And so just because of inflation, they're now underinsured. So the most recent thing, and this is just straight from the mouth of an underwriter on Friday, so this is very new. He said the current rebuild cost in California on the low end is $350 per square foot. On the high end is $600 per square foot. He said it depends on the area. So generally, if it's in a nicer area or if you have a better quality build home, the nicer it is, the higher it's going to cost per square foot.
Or like a hillside home, when that rebuild, like I have a hillside home, I would assume the rebuild would be higher.
Yeah, it can be higher for that, for sure. But every state is also different. So just because California is all the way up to 600 per square foot, that doesn't mean it is in Texas, Tennessee, and Florida and Kentucky and all that. So Texas, for example, has been around 200 per square foot lately. In my area, in the greater Houston area, specifically the Woodlands, the last thing I saw was about 175, but for whatever reason, it seems to be a little bit lower here, which is great. And you need cost less to build, less to buy the house, and less to insure as a result.
And I think that just happened to me too. They had the square footage of my house of 2,100, but my square footage is 2,550. So they didn't have the coverage of my house correct.
That was something we found too when we were going through it. We found, wait a minute, the square foot doesn't match. The coverage might be off a little bit. Let's make sure this is.
Yep.
Yeah.
And I didn't even think that about the hillside. Like my house would be more per square foot anyway. So it's a constant. The point is you have to constantly every year look at your policies, just like you look at your credit every year.
It's something to actively manage, like you would your money, your credit, all that. And so as a quick example, just in case anyone's kind of wondering, well, how does this work out? Like if, let's say you have a 1,000 square foot home in California, depending on the area, that would mean you would need 350,000 at minimum, up to 600,000 in coverage for the dwelling coverage to make sure you're properly insured. In other words, if this house were to get leveled for some reason, you have enough coverage to rebuild the entire thing from the ground up. That's what insurance is essentially trying to do.
Someone just asked a question, is there a limit on how often you can review or change your insurance? And is there a minimum time period that is protected by the current carrier?
No, so most policies are for a year. So if you have a policy, unless it gets non-renewed or canceled for some specific reason early, which doesn't happen too much, it's for an entire year. So that's that part of the question. The other part, what was the first part of the question again, Christy?
Is there a limit on how often you can review or change insurance?
No, you can change anytime. The only caveat to that would be some carriers, especially if it's a surplus lines policy, which is like third-party markets, you might say, like usually like backup carriers. Sometimes those have what's called a 25% minimum earn clause, meaning even if you were to cancel the next day, they're still entitled to 25% of the total premium. So another way to say that is if you cancel after 3 months, you'll get a prorated refund, but not before. They're always entitled to 25% of the premium. Otherwise, you can shop all you want and you don't have to wait till renewal time. You can always shop, you can always change things, you can always make adjustments on your policies, no problem at all.
And then here's one too. I joined late, missed the gentleman who's presenting. I would love to review my real estate policy. How do I get in touch?
Oh, I'll share my email at the end, and then you'll have my contact info. Reach out, happy to help. You can send your policy or you can hop on the phone for a quick call, and I'll grab a little bit of info. We can check everything out, and then we can shop for you, see if we can find you anything better, coverage-wise or price-wise, just whatever you're looking to do. Happy to help.
And one other person, I don't know where it is here, but they asked if you're going to talk about the LLCs.
Yes.
LLCs and how to structure.
Okay. Yeah. Hey, I love it. By the way, keep the questions coming.
Yeah. And by the way, just so you guys know, I have a little box that's about this big, and it doesn't even say the whole sentence. So that's why I'm having a hard time. I have to scroll it. It says some carriers will also give a discount if you have vent covers that can block flying embers during fires. But someone did, I don't know what happened to it now, but I did find there was someone asked a question about LLCs and structuring.
Yeah, if there's any specific questions about that, just go ahead and type them in the box and I'm happy to answer. I will get to LLCs a little bit.
Oh, do you offer,
specific, let me know.
Seymour, do you offer insurance in Michigan?
I don't think we have Michigan opened up yet. I can get it though.
Okay.
I can open up any state within about a week for almost all of them, sometimes less. So yeah, reach out and we can talk and happy to see what I can do for you.
And then are you going to talk about LLCs and entities structuring?
Yeah, entities as a general rule, I'll hit that right now since the question came up. As a general rule, you want, if the LLC is on title, then you want to have the LLC as either the named insured or as additional named insured. That's the best way to do that. If it's a commercial policy, usually you'd use something like that for if it's more than 4 units. So if it's like a 5-plex or a big apartment complex or something like that, when it's that, then you would want to have the LLC as the named insured. That's the basics, but if there's more specifics, keep the questions coming.
Okay. Do you recommend an umbrella policy on top of a regular landlord insurance policies?
I do. I got my first umbrella policy. This is personally when I bought my first rental property 12 years ago. It was right when I bought my umbrella. Reason being, we had more risk exposure now, and I wanted to make sure that was covered. So how much of an umbrella you want? Typically, they come in $1 million increments, 1, 2, 3, 4, 5, up to 5. You can get umbrella policies of greater than 5 million in coverage. It's usually called an excess umbrella. It's like an umbrella for an umbrella. But most people between 1 to 5 million. How much coverage? It just depends on how much you want to protect. As a general rule, I recommend covering the value of your assets, or you might say the value of your estate. Some people say covering your net worth. I think there's an argument to be made there, and that's fine. But personally, I think for real estate and rental properties, it's a little bit different, because if we have a loan on a property, like let's say I buy a $500,000 property and I have $100,000 down, so now I have a $400,000 loan. Technically, my net worth, if you will, on that particular property is only $100,000. It's my equity, but I'm still in control of a $500,000 asset, and I want to make sure I have protection for the entire asset. So that's how I look at it personally. And yeah, the reason umbrellas are, I love umbrellas. They're the lowest cost form of asset protection there is. And one single umbrella can cover excess liability coverage above and beyond your home, your rental properties, your cars, if you have a golf cart, if you have a boat, if you have a motorcycle. One single policy covers all that. So let's do a quick example just to kind of bring that home. Let's say you have a landlord policy and it has $500,000 in liability coverage. And then someone claims they got hurt, they lawyer up, they want to come after you, and now they're saying, I want $1 million. Well, your landlord policy only has $500,000 of coverage. So now there's a $500,000 gap. And that's where the umbrella can come in. It'll fill that gap to get you to $1 million or higher, depending on how much coverage you have. So I think
and that brings me to something that Dr. Reddick used to always say. That's why you do not want to have houses that have hot tubs and pools, because they're huge liabilities. Right. People can break their neck at the bottom of the pool. They can slip and fall, really dangerous. So I had 2 different houses back in the day that had pools, and I got rid of them for those reasons, for liability reasons. So that's a big one.
They can be a good selling point, and they're fun and they're pretty, but as a landlord, I won't go near it personally. No way.
Yeah. And then also, if you're in a situation like me where I have young drivers with my kids, college age kids, and then they were teenagers before, on my policy, I can't get my limits high enough to get umbrella coverage because it's cost prohibitive until I get them off. But I always did have an umbrella up until they became teen drivers.
Yeah. That's a challenge for sure, because to have an umbrella, in order to qualify for it, they usually want to see that your auto limits are 250, 500. Usually want to max those out. They usually want to see that you've maxed out the liability limit on your underlying policy. For rental property policies and homeowners, that doesn't cost much. A lot of times going from, say, $500,000 in coverage to $1 million in coverage on liability might only be an extra $40 a year, give or take, depending on the carrier. Auto, making that jump from, say, 100,000, 300,000 to 250, 500,000 can be a lot more cost prohibitive, especially if you do have those young drivers. So if that's not that would be the ideal, just because the number one risk that can use the umbrella is auto risk, and especially with young drivers, because they just don't have as much experience. So if you can afford it, I think that's a great idea. If you can't, then we can be creative, and you can still get an umbrella policy that'll cover your rental properties in your home. It just may not cover over your auto.
You and I need to talk about that, and I need to look at that.
Yeah, you can still have the umbrella policy. It just may not provide that extra liability coverage for auto. but it can still cover everything else. And what's cool too about the umbrellas, I have one awesome, they're just my new favorite. I have one awesome umbrella carrier in particular that will also include LLCs and trusts on it now for no extra charge. So a lot of times what we used to have to do is if you had let's say you had 5 properties owned by an LLC and you had 5 more properties owned in your own name, we'd have to get you a personal umbrella for the 5 owned in your name, and then we'd have to get an umbrella for your LLC for the properties owned by the LLC. And the LLC umbrella might cost $2,000 a year, $3,000 a year, something like that. But now I have this one carrier where we can just add the LLCs to your personal umbrella policy for no extra charge. So you can save a lot of money and still have that umbrella coverage. The only little footnote there is the LLC can't have any other business function. So if it has to be, in other words, it has to be a holding company only. It can't be a business of some sort. It just has to hold real estate.
And the LLC, the umbrellas are relatively inexpensive. I don't know what they cost now, but they're very inexpensive.
Yeah, it just depends on how many cars, what kind of cars, how many drivers, the age of the drivers, are there any claims on the record, how many rental properties, how many homes, all those factors, and you add all that up. But I mean, I just did one the other day. I think it was $320 for the year, maybe $330, but I mean, in the low 300s for a year, and that was with $1 million in coverage. I did another one recently for someone I think they have, I want to say 14 rental properties. And we did a $3 million policy for them, and I think it was like $1,200 a year.
Yeah. Someone else is asking here, do you provide insurances for multi-family properties?
Yeah. So if the property is up to 4 units, so single family home, duplex, triplex, fourplex, you can put that on a personal, on one single policy, and it'll be a personal policy. If it's 5 units or more, it needs to be a commercial policy. And then if it's multiple structures, we can do all those on a commercial policy. If it's multiple structures, but no more than 4 units per structure, we can still do that on the personal policy. That may have been a little bit convoluted. Hopefully that makes sense, but I can unpack that more if need be.
Someone asked here, we might not get to any slides. Someone asked here too.
That's all right.
Budget for a $5 million policy.
A budget for a $5 million umbrella?
It looks like it says, how much would you budget for a $5 million policy? I'm not sure if they're saying umbrella or it seems like it would be an umbrella.
That's my hunch. Really, we just have to quote it just because there's so many factors involved. We'd have to see what it would be for you. It could be, $1,000. It could be $2,500. I'd say that's probably a fair ballpark, just depending on how many assets are involved, how many drivers, that sort of thing.
Okay. Perfect. Those are all the questions. Woohoo!
Okay, keep them coming, guys. I love it. That's the fun stuff. I don't care if we don't get through the slides. I want to make sure I'm taking care of your concerns. So bring it on.
Yeah.
And then until more roll in, if I can get the slides to work, we'll just keep going along here. Did I miss one? Let's see.
Let me turn my.
I think my slides got stuck. Let me try this again.
Is it working?
No, mine are stuck. What do you see? The ensure you have the property coverage.
Property coverage example 1. Do you want me to turn it?
Yeah. Can you
put your mouse? Did you put your mouse over it?
I did.
It has you listed as being able to.
Let's try again.
Okay, I'm giving you again. Okay, I just gave you permission again. Okay. I unchecked you and then check it. Can you and then put your mouse over it and then try do the arrows. You got it now?
There it goes.
Yep, you got it.
All right, we're back in business. Okay, so we just did that one. Don't be uninsured. Next thing, make sure you have the proper coverages. And these days, some carriers offer a lot more flexibility than others. Some carriers let you more or less name how much coverage you want, which ones you want, which ones you don't. I love those. I have a few great ones that are specific to landlords only. That's all they do is rental property policies. They're very good about that because they understand we investors, we don't always want every coverage, or we want to play with it a little bit, and that helps with rate too. So using those carriers is great. And then other carriers, usually the more traditional ones, they're more of a package deal where there's going to be a floor, meaning they won't let you have below a certain amount of coverage, but you can always increase it if need be. So I'm a fan of the former because we have more flexibility and more control over it. And that also means more control over rate. Okay, so as an example, other structures. And Christy, I think you and I were talking about this the other day. You knew someone with a barn, right? And something like that. I think that was you.
In Topanga and the fires here,
Yes.
they had a barn and they had accessory buildings. So they had a dog sanctuary there, and none of it is covered.
None of that, because they didn't have other structures, right? So they might have had coverage for the home, but they didn't include all these other structures. So what is that? Technically, it's any other structure on the property that's not the actual home you, if it's your primary, or a tenant, if it's a rental property, would live in. So that's things like a detached garage, a swimming pool, a barn, a shed, a gazebo, fences, walls. These are all other structures, but it's not the house. And that's where you get coverage for other structures. Sometimes that's high and we can reduce it and then save you some money on premium. Other times we need to make sure we include it so that there's coverage for the things that are on the property. So that's a big one to look at. And then another example here, yeah, there's definitely a lag here. There we go. Let's go back again. The other example I thought of is loss of use. And this is, can also be called fair rental value on a landlord policy. But what this is, if it's your primary home, loss of use compensates you for, basically it's a bucket of money to go live elsewhere, at a hotel, at a rental property, while your home is being fixed. If it's a landlord policy, this is usually called fair rental value, and they compensate you for lost rental income if your tenant has to move out due to some kind of damage until they can move back in. So that's an important one because you don't want to be on the hook for a mortgage and you're not getting the rental income coming in, and you have all your regular bills and expenses. So make sure you have enough there to compensate for that. Then understanding your coverages. Know what your policy covers for, know what it doesn't. I think really what this comes down to is this assuming is the main problem, right? We run into, excuse me, get some water. We run into trouble when we assume. We think we know what it covers, we think we know what it doesn't, and then all of a sudden something happens and we find out, uh-oh, it's not the way I thought it was. That's, if there ever are problems, that's where it seems to stem from for the most part. Not always, but for the vast majority of situations. So most property policies, they do cover for damage from 16 different things. They call those perils, by the way. So anything that can cause damage to your home, they call that a peril. So there's a list of 16 perils. It's things like fire, water, wind, hail, lightning. These are all things that can damage your home. If you want a list of those, I have a great one. I'm happy to send it to you for anyone that was wondering or whoever asked for it earlier. That's my email address right there. It's just my name, steve.page, like a page in a book, at fidayinsurance.com. You can email me, ask for that. Also, Chrissy, we said we'd do something, put together a list of discounts, right? So
yeah, that would be
we'll
great.
work on that. We'll put that together. Email me if you want that. We'll send that to you. That we've got that as well. But yeah, that's a big one, is knowing, hey, what are the 16 sources of damage? What does this thing cover for? What doesn't it cover for? Two other things a lot of policies cover for that you want to make sure are on there, which are not those 16 things, are the personal injury, which, like I said earlier, that would be like wrongful eviction, and then personal liability, which is someone got hurt on the property. I mentioned this a little earlier, but I know more people have shown up since. So a really common misconception is that homeowners policies and landlord policies don't provide coverage for earthquake or flood. Those are always separate policies, and that's true in every state with every carrier. Always a separate policy. I know that just actually this morning I was talking to someone. They said, so if there's a flood or earthquake or fire, I'm all covered, right? And it's like, well, for the fire, yes, flood, earthquake, those are separate. So I want to make sure everyone knows that, just in case.
Yes, and when you have properties in Florida, wind and flood will always argue with each other. Flood will say, well, no, it was wind, and wind will say, no, it was flood.
Right. Usually they're looking for what's the primary cause of damage, what instigated it all.
What's a wind event? What's a flood event? And they argue back and forth.
Right.
With each other.
Exactly.
And neither one wants to pay.
And then having enough coverage. And that can vary based on the property, based on the owner of the property based on the situation. You want to make sure you have enough coverage based on all the ones that you need for your situation. So that's something else. If you want to reach out, I'm happy to evaluate your current policy. We can talk about the scenario, the situation, what's going on, what if that looks good, or maybe there's a better option for you. And then here's, since we're talking about having proper coverage, I think the tendency is to think, well, that's just going to cost more. And I wanted to show you here that that's not necessarily true. It doesn't have to cost more to do it right. And here's a real life example. This is someone I was working with the other day. These are two quotes, one on the left, one on the right. It's the exact same client. It's the exact same property. There's nothing different there. And you can see the deductibles are the same. The dwelling coverage, the amount of coverage on the house is the same. And so let's look at the left one. I don't know if you can really see this, but there's $419,000 in coverage on the home. And there is only 50% of coverage for water damage, which means 50% of that 419,000. So whatever half of 419,000 is, 208,500, something like that. My mental math is working all right. They will only cover water damage up to half of the dwelling amount. That's what that 50% means. And then they have $500,000 in liability coverage. And of course, you can see on the bottom, that costs $1,868 a year. But if you look over on the right, I was able to get even more coverage. They still have the 419,000, but we were able to add an extra 25% on top of that, meaning their total coverage is 523,000. I got them full water coverage, meaning up to 419,000, and I got them $1 million in liability coverage. So we doubled that. And yet, in spite of having all that extra coverage, the policy actually costs less now. It's $1,781. So, you know, not quite $100 less, but way more coverage. And that's value, right? You get a lot more for your money. That's what it's all about. And now this person, I'm way more confident that they're properly protected, especially in the event of a liability claim or some kind of water claim. I think that makes the point. Just because it's done right doesn't mean it has to cost more. Christy, any other questions pop up before I move on to the next section here?
I don't think so.
Okay. In that case, we'll keep
what
going.
are the problems getting coverage when the properties are old, last century?
Yeah, that's a good question. So some carriers will only cover back to 1940. Some carriers will go back to 100 years, no more than 100 years old. Others will, as long as it's been updated, you know, new roof, new HVAC, new electrical, new plumbing. Others will, if what's the other factor sometimes they look at? Oh, they will, but they just require underwriting approval. In other words, they might want to see photos, just, hey, how's it look? Is it in good shape or is it totally falling apart? So you can definitely do that. My first property was built in, I think it was 1918. So we ran into some of that and found out, you know, sometimes the older properties, they can cost a little more, they can be a little more difficult to insure, but there's always a way. And in worst case scenario, we can approach surplus lines markets, which are usually like backup plan markets, and we can get it insured that way. At the very least, finding a solution until maybe some of those updates have been done, and then we can approach some other carriers and find an even better deal. These slides are misbehaving. All right, so got a couple tips here to round it out. And our first one is make sure you have a full coverage policy. And what I mean by that is replacement cost at a bare bones minimum. Extended replacement coverage is even better. That means, like what I showed you in that example a minute ago, they'll give you an extra 25% above and beyond the dwelling coverage. Some carriers will do an extra 50% above and beyond that. There used to be one that did even upwards of 200%, but they haven't really been doing any new quotes for about 1.5 years now. So hopefully they'll come back soon because that was a cool feature. And this is in, as opposed to what's called an ACV policy, or actual cash value. Actual cash value is the depreciated value. We don't want that. That's a great way to, if you ever needed to lose money fast, because you want to make sure you get enough money from the insurance to rebuild as it was. not the depreciated amount. An easy example of that is like, let's say you went out and bought a refrigerator today for $1,000, and then 2 years from now, something happened to it. Replacement cost, they'd give you $1,000 so you could go buy a new fridge of like kind. Depreciated value, they might say, well, it's 2 years old, it's got some wear and tear, it's really only worth $500 now. Here's $500. You know, which one do you want? Especially if you're talking about equity in a property. So replacement cost is the way to go there. And then as much as you can, avoid exclusions and coverage limitations. Earlier I talked about some carriers are, maybe they're only offering $10,000 in water coverage or only $50,000 in water coverage, or maybe no water coverage at all. So you just want to make sure of those little details. And carriers are doing that partly to minimize risk, but partly to help make it more affordable. But you just want to make sure it's not so low that you potentially end up in a bad spot. Bottom line is, you know, have enough insurance, don't be underinsured, or potentially worse, under the impression you are, and then only to find out when you need it that you're not. Stuck again.
Okay, the only thing I could do, can I undo you and then I'll add you again. Okay.
Sure. Thank you. All right, let's try that.
I just use the arrows on my keyboard.
Yeah, that's what I'm doing. It's just not cooperating. There we go. Okay, occupancy, I mentioned this at the beginning. We really want to make sure that's correct because that can be grounds for denial of claim, and we don't want that to happen. So we want to make sure if it's a vacant home, it's insured as a vacant home. If it's your primary home, it's set up that way as primary occupancy. If it's a tenant, if it's a second home, maybe it's a short-term vacation rental, maybe it's a flip and it's under construction. All those are different scenarios that are different occupancy, may require a different policy. And a lot of carriers may not do some of those occupancy types. Like a lot of carriers don't do short-term vacation rental. A lot of carriers don't do policy if it's under construction or vacant. So we really want to make sure that's correct so that if you ever need it.
And vacancy, you cannot, if you'll correct me, Steve, you cannot have it vacant more than 30 days without, because obviously when a tenant moves out, sometimes there's a lapse, but if it's vacant more than 30 days, you need to add on a vacant home policy, and it's not expensive. You're talking $80, something like that. Not expensive, but you have to do it, otherwise you won't be covered. That happened to me once. I learned the hard way.
Yes, it's not fun. So as you know, occupancy is a big deal. The third one is using deductibles correctly to find that balance. Again, it's always a balance between cash flow and asset protection, which means peace of mind, right? It's working on both ends as much as possible. And so the general recommendation is if it's a 1 or 2 unit rental property, $2,500 deductible. If it's a 3 to 4 unit or even higher, $5,000 deductible. And these days, the standard for most states is a 2% deductible for wind and hail. So a lot of times, especially in states like maybe Texas, Florida, Tennessee, things like that, you'll see a separate deductible. If you're in California, that might be new to you. California typically has one deductible, like, you know, your deductible is $2,500, it covers everything. In other states, they can separate out the wind and hail deductible, and they can be separate. So like, for example, on my home, I have a $2,500 deductible, meaning if it were to be damaged by fire, lightning, anything like that, water, I'd pay $2,500 out of pocket, and then my insurance would cover the rest up to the limit. But if there's damage from wind or hail or a hurricane or something like that, my deductible is 2%. 2% of what? 2% of the dwelling amount. So if my dwelling coverage, the coverage on the actual house was, for example, say $100,000, then my deductible would be $2,000, 2% of that dwelling amount. That's how those work.
That's what I do. I put 2% deductibles on mine, so they'll lower the premium.
Absolutely. And some people are even going a little bit higher on the wind and hail one now. It just depends what your tolerance is. I had a guy go 10% on a big property in Florida the other day, which was a big deductible, but he said, that's okay, I can do it. He just wants lower premium. No problem. Let's do it.
Well, it's kind of the way I see it, everyone, is it's kind of like what your auto insurance. I put my auto insurance like a $2,000 deductible too, because I can normally negotiate with my mechanic to pad that 2,000 in. And so let's say you need a new roof and insurance gives you $15,000 and you have to pay, let's say $2,000 of that. I'm just say a 2% or something. But the thing that happens is you can get multiple quotes, and you can normally end up absorbing that extra money that you would put in by just shopping around and getting quotes to do the work versus what the appraiser at the insurance company said that they would give you.
Yes, you can.
That's what I do, and it works out every time.
Good point. Absolutely.
So another question, but I don't know what this really means. It says the broker found a carrier. Did I pay a premium for the lag in ownership?
For the lag?
Yeah, I don't understand what that means. If that person can clarify what they mean in that.
Yeah, please do. Happy to answer. I just need to.
When you buy a house, or if you own a house, you always, the insurance ends the day that person moves out, and your insurance starts the day that you move in. You know, it's an even switch. But if you're talking about the broker found, if you're talking about an insurance broker found a carrier in a lag in ownership, does that mean that you didn't have insurance for a period of time? I'm not sure
if there's a gap or a lapse of some sort, but let's unpack that, and I'm happy to answer. And if we run out of time, then
you can always call Steve and ask.
By all means, call me, email me. We'll figure it out. We'll get you taken care of. The fourth one: have a property manager. For whatever it's worth, Marshall Reddick is truly the best property manager I've ever worked with. I've had a lot of them, and I hated the rest. And I love MR.
There's another one. Providers allow me to insure property that I didn't own. No, I don't believe you can insure property.
That's true. Yeah, you can't insure something that you don't own.
Right.
If it's an escrow, there's a little bit of leeway in that regard, but the property won't start until escrow closes. So you can still get the policy, but it won't take effect until you truly own it.
The tenant causes damage. Does the rental policy cover it, or am I responsible? We're going a little over time here. I hope you guys don't mind. So if a tenant causes damage, does their rental policy cover it, or am I responsible?
Depends on the carrier. My understanding, and take this with a grain of salt, I'm not usually involved on the claim side, but whenever there is a claim for any of my clients, I do hear about it, so I get a little bit. But the main thing, I have to back up. There are some carriers now that are offering tenant liability. One in particular that I really like, they offer $100,000 in tenant liability coverage. So if the tenant were to, damage something, your own policy has coverage for that. A lot of other policies will have coverage for vandalism. So if the tenant was intentionally trying to damage the property, they can cover that. And then it's possible too that if your tenant has a renter's policy in place, which I highly recommend, it's possible you can make a claim against their liability coverage on that for damaging yours too.
Yeah, and so, from my experience, I had a tenant damage my house in Orlando, Florida, and I put it under vandalism claim, and they kept saying, no, it's hard wear and tear. So I ended up getting a lawyer and suing the insurance company who went bankrupt, and then on and on. I had to go through Florida Insurance Guarantee. But one good thing with Marshall Reddick is they make sure that your properties their tenant has renter's insurance. And it's very, very important. And they name you as additional insured and Marshall Reddick as additional insured. So it's very important that all of your tenants have renter's insurance.
So, Marshall Reddick is reaching out to me all the time to make sure of those exact details.
Yeah, and when you have a good property management company, they do a walkthrough of your property every year, and they take about 75 photos. So you really have to make sure your managers is a key to your success in property management, in owning properties.
Yeah, absolutely.
I've had that problem before too with non-Marshall Reddick managers because they weren't in the area where I had a house, and I've had problems.
Me too. Not fun. I know we're short on time, so I'll keep pushing along. And then if there's anything else, anyone needs that list of all the sources of damage, or you want that list of discount things, I'm looking at a big one right here. I was making some notes, and I'll keep working on that. Reach out, happy to get it for you. But I want to make sure I get this done too. So the fifth thing is make sure you have a good insurance score, which looks at a combination of things like your credit score, your claims history, how many loans do you have, what's your debt situation, what's your payment history? Do you make the payments on time? What's your credit history? Are you trying to open up a lot of new lines of credit? And that can vary state by state, but it is used to help determine rate as well. So for example, someone with bad credit and a ton of claims, they're either just going to get denied entirely, or the rate's going to go up. So the company is looking at it like, this might be more of a risk here. We won't do it at all. Or they might say, well, we'll do it, but only for this much money. And different carriers have different tolerances for those things. And another point why it's good to work with a broker in that regard, because we know that it's called the appetite of the carrier. We know what the carriers like, what they don't like, so we can help figure out where best to place you for your situation. We just talked about this. Always make sure your tenants have a renter's insurance policy in place. And as we said, a great property manager like Marshall Reddick will make sure they do. And that also provides an extra layer of protection for you. Then we want to have proper integration of trusts and LLCs. If they are on title, they need to be on the policy. We also want to make sure property management is listed on the policy, that the correct lender is listed on the policy and correct loan number, and that if you do have an umbrella, that all these trust LLCs, these properties, all these things are also listed correctly on the umbrella. That way you know you have proper coverage. And that leads us to umbrella, which we probably discussed pretty well. Yep, I think we're good there, but it's a major strategy for asset protection and very low cost form of that as well. And then depending on the area and the lender's requirements, flood insurance is a good idea, earthquake can be a good idea, and then wind insurance. Some policies, especially in states like if you're in coastal Texas, parts of Florida, Louisiana, things like that, you may have a policy that doesn't cover wind. So you have to get a separate standalone policy just to cover the wind aspect of things. And if that's something on there that your lender requires or is a concern, then that's something we can do too. And lastly, I'll finish with this, and this is don't be too cheap, because sometimes you do get what you pay for. And I'll give you a quick personal story on that. I have a fourplex in Texas, and the service line broke on actually last Mother's Day. We were down at the beach, got the call. Service line broke, water flooding everywhere in the yard. Kind of ruined Mother's Day a little bit, but we called, got an emergency plumber, $9,000 fix. The policy we had didn't cover service line. Some carriers do, some don't. The one I had just didn't. So lesson learned, what is the service line, by the way? It's the line that brings water in from the street, like from the city line, onto your property to your home. So that line broke, $9,000 fix. And so I immediately thought, you know what, let me reshop my policy and see if I can find something that does cover service line and then what that would look like cost-wise. So I found one, and it was $900 more a year. And I said, well, that's going to eat into my cash flow. I don't know if I really want to do that. It's almost $1,000. What are the chances lightning strikes twice? Sure enough, 3 months later, service line broke again, another $9,000 out of pocket. So because I didn't want to spend the extra 900, I got to spend an extra 9,000. And so that's what I mean by this. Sometimes you get what you pay for. It's good to know what those coverages are. A lot of policies have all these extra little add-on coverages or little things that are in there that you can increase or decrease. Things like service line, things like water backup and sewer. Sometimes there's cyber protection, identity theft. There's all kinds of little things. It's good to have a discussion about that. What's available to me with this carrier, what's not, and things like that, just to make sure you're covered for any potential scenario that you are concerned about. Not everyone's concerned about bed bugs, for example. Some policies do offer some coverage for that, some don't. So if that's a concern for you, let's make sure we get you one that does have that.
A big thing here in California is sewer line breakage, because our lines are cast iron often, and then from your middle of your yard to the street is clay, but you're responsible all the way to the sewer in the street, and the clay pipes here break all the time in California. So if you live in California, I'd strongly suggest that you get sewer coverage on your policy.
Absolutely.
Like,
and that's one of those.
I live up in the hills. My sewer line runs all the way down to the street below me, below other people's houses. If that sucker breaks and I don't have coverage for that, it's going to cost me $100,000.
Yep, that's a big one. And so things like that can really come in handy for just all these little scenarios that you might never expect or would never even dream up in your wildest imagination. And then next thing you know, here you are. A couple other cost-saving tips: buying in areas with more mild weather. Those areas tend to have fewer claims, which means lower premiums. Newer homes do tend to have lower premiums just because they figure older homes probably more likely to have things break down. Newer roof has lower premium, especially if it's less than 15 to 20 years old. No carrier really likes anything more than 20 years old, but the newer the better. Looking for bundle discounts is good. And by the way, you can bundle if it's the same carrier you can bundle even if it's in multiple states, which is a really cool thing. There's also discounts for property managers. There's discounts if you have, like Christy said earlier, a fire alarm, a burglar alarm, even more so if they're centrally monitored, like one of those third-party monitoring services. Finding carriers that have more flexibility. This isn't insurance related, but fighting property taxes, sometimes you can fight those. I know here in Texas, you can appeal your property tax increases, and there's ways to do that. There's even attorneys that specialize in that. They can be very good and help save you there. All that just helps your property cash flow that much more. Yeah, I think we should, especially for sake of time, Christy, let's make this list and we'll get it out.
Yeah, there was a few more questions.
Oh yeah, let's do it.
They were all different variations on the same things we've discussed. So anyone who has questions, we'll go to the pages that there's Steve. So take a picture right now or write down his number.
There we go.
There you go. And then we'll go to mine, and you can contact me as well. Most of you, I tried to reach out to as many as I could today, but definitely just call Steve and his direct line 951-614-6212 and his email there as well. And if you have any further questions, you can shoot him an email, give him a call. And then you can also download with Marcia Reddick our free property rating ebook, which is really amazing. I recommend everyone read it. It's 38 pages, and it tells you exactly how we rate properties and why we are in the areas we are in and why we pick the areas that we're in and the demographics and why it's so important. It's like landlord-friendly states, jobs, where people are moving, Sunbelt states, all of those things.
Ooh, on that note, I just got word today, Apple is putting in a huge facility here in the greater Houston area. So that's going to be interesting.
Oh, yeah. Okay. That would be important. Educational videos, articles, you go to our website, marciareddick.com/learn. Everything under the sun. Hundreds, if not thousands of videos are there, including this one. They always get uploaded. What you can expect from a consultation with an advisor, realtor like myself. We answer the why, how, when, what, where, and who. Why? What's your goal setting? What is your long-term and short-term goals? We evaluate all your options based on your situation and your money that you have or don't have. We decide on a time frame for you and start getting you ready for that. What's your criteria? Do you buy in-state, out-of-state? And that bases on your price points. Where, identifying markets that you may be interested in, and who, introducing you to all the key players, myself as an advisor or your advisor you're working with, and then the different areas and realtors and property management within Marcia Reddick. And also our mortgage fund if you need a loan with Reed Hazard, a TMG, or through our mortgage fund. Here's my information. I'd be happy to talk to you. You can email, call me anytime as well. 818-694-0740. That's my cell. Pretty much answer from 8 a.m. to midnight. You can also text me, and then there's my email there as well. So we are very grateful that you all hung on. I know we are 16 minutes past time, and I see people are dwindling. So thank you so much. We appreciate you all, and we are grateful and hope everyone has an amazing evening.
Thank you guys for being here.
Bye.
Talk to you soon.